So, what we're going to talk about today, and it's going to have to be a little bit shorter, is going to it's going to be how to trade a trading range. Okay, so everybody should be looking at my little picture there and my little FX Street website there. Okay. Oh, okay, good. Hi, Marcy. Yeah, we had a great time in Florida yesterday. Oh my goodness. It was so nice to meet everybody. So thank you all again for showing up and coming out to our live event yesterday. That was great. So again, I apologize, guys, for being a little late here, but the computer issues. We just had computer issues in our classroom too, so it's just funny. It was another person's computer. Okay. Forex markets are great because Forex markets move all day long. They're 24 hours a day, and price always has to move. Price cannot stay still. So what I like to do is during periods of time when there's no economic data, when there's no reason for the buyers to be stronger than the sellers, what I'll do is I'll actually start to look around and try to identify trading range opportunities. And again, horizontal movement is when the two forces are equal, the buyers and sellers. Vertical movement, obviously, is when one force is stronger than another force. So buyers example, in this example, buyers are stronger than sellers, you have an uptrend. Sellers are stronger than buyers, you have a downtrend. Now, after a big move up in price or a big move down in price, sometimes the people that have been making money start to consolidate and take gains. This usually forces prices to start moving sideways for a period of time. Okay, and for somebody like me that's trading these markets at all different times of the day, I'll look for opportunities to actually make money when these trading ranges occur. But again, like anything that we talk about every time I do this webinar, we want to make sure that we set rules and we have strategies, simple little tiny strategies. So let me set this up for you, what exactly happened here. First of all, we'll lay out the rules, and then I'll tell you the situation behind the trades that you're going to see that we took here for the last couple of days. Okay? I'm going to screen through my currencies to see which ones are going to give me the opportunity to actually trade a trading range. So that's the first thing I'm going to look for. So I'll always look at high time frame charts, daily charts, weekly charts, and I'll try to look for a couple of similar highs or a couple of similar lows. And the reason for a couple of similar highs and lows is if we're starting to go sideways, of course, you're going to have highs and lows that are pretty much close to each other. Not always perfect. You'll never get those perfect situations all the time. Once I've gone through my list and I've picked which currency I want to trade, then I'll make my decision as to how to trade it, which method of trading I'm going to use. All right? And I'm going to show you a couple of little ones today. And there's all kinds of different ones that you could use, but I have a couple that are just pretty little interesting ways to trade a market that's basically just going nowhere. And again, folks, from anybody that knows me, I'm telling you what the brokers are doing during these periods of indecision. They're just ringing the cash register. They're just moving price up and down, up and down. They buy at the bottom of a channel, they sell at the top, they sell at the top, they buy at the bottom. And they can just print money if they want, okay? Hey, Taro, that's a great question. The most volatile pair is the one we're going to talk about today, which happens to be the British pound. That was the one that I actually did this webinar on, okay? And that's because the liquidity in that market is a lot less than the liquidity in the euro versus the dollar, for example, okay? All right, so these are the steps that we're going to use to take this trading range strategy. First one, step one, we identify if the market is trading in a wide range. Step two, we select our currency. Step three, we decide the method of entry, and I'll show you a couple today. Step four, I'm going to select the logical stop loss based on the method of entry. All right, so we'll talk about where to place stop losses because, of course, prices can always break out of the range at any time. Then we'll select targets based on the previous candles' highs and lows. And of course, if I'm long, I'm going to use previous highs as possible exits. And if I'm short, I'm going to use previous lows. Okay? All right, so start with your daily charts or a weekly chart. Determine if you're trading sideways. and then pick which one of the smaller time frames you want to use for the potential trades. And here's an answer to your question, and it was a really good one, Taro. For currencies that have high volatility, such as the GBP or the Australian versus the dollar, I use a 240 chart, which is a 240-minute chart, or I could use a 180-minute chart. So I'm using 4-hour charts or 3-hour charts. First of all, when there's periods of absolutely low volatility, 4-hour candles are the best thing in the world. All that low volatility trading will take place inside of one candle. It's a really, really clean chart. It's an easy picture to look at. When I do this strategy using the euro, which is more liquid, I can use a smaller time frame, like a 30 or a 60-minute chart. So I'm going to start off by showing you this week's euro chart. And as you can see, the euro has been trading in some kind of a channel. But how many people recognize what that potential pattern we're looking at can be? All right, type in what you think that potential pattern right there on that chart is. Yes, I see flag. There you go. Yeah, it has the potential to be a bull flag. Okay. All right, it has the potential to be a bull flag. Okay. Somebody typed in bear flag. For it to be a bear flag, you'd really need to see a big red candle above the thing. And right now you've got that nice green candle, so it really more looks like a bull. And somebody asked me to go back one slide. No problem. Okay. If you're taking a picture of it, I'll hold it there for a second. So that's our picture of the euro on the weekly chart. So really no opportunity. The other thing about a bull flag or a bear flag is you're making lower highs and lower lows. And the definition of some kind of a trend move, even though it's not really going very far, the definition of a trend would be, downtrend would be lower highs and lower lows. An uptrend would be higher highs and higher lows. So it meets the criteria for consolidations. However, it's more or less like making lower highs and lower lows, so it's not that great of an opportunity. And the daily chart of the euro, which is the next chart I want to look at, is actually making another pattern. And how many people in here recognize what that pattern is? Type it in if you do. Okay, this one's actually more of a descending triangle. Right, Gabriel. Or a wedge. Good. Yeah, I agree. We're making lower highs for sure, but right now we seem to be finding a little bit of support. But when I look at that daily chart like that, I'm going to say to myself, it's not that great of an opportunity to actually trade a trading range. So I'm just going to move on and pick a different currency. Here's a weekly chart of the British pound. Again, this is from the beginning of the week, 4/13. I happen to take the screenshot, all right? And now on this chart, it happens to be a different picture, right? It's actually an ascending triangle versus a descending triangle. It also happens to be an ascending triangle after a big sell-off. So for anybody that's heard my webinars before, it's possibly a stage one, okay? And a stage one is simply a accumulation following a big sell-off for a possible breakout into an uptrend. And since currencies trade in cycles, stocks trade in cycles, everything pretty much trades in cycles, I'm kind of looking at this chart and saying to myself, looks to me like the pound wants to go higher and go into a new uptrend. So that would mean the pound goes up against the dollar. Okay? All right. So once I see this picture, I'm going to go down to the daily chart. And now, what does this kind of tell you about the possibilities for the euro based on that flag that we're looking there? Okay? So even though the euro is making a bull flag, it hasn't completed the pattern, but the daily chart of the British pound has already made a bull flag, and it's already broken out of the pattern. And so it's a pretty interesting picture. Looks like most of the currencies want to try to rally against the dollar. Okay? All right, so I like the British pound. I think it looks pretty good. I'm going to take it one step further now, down to the next time frame. This is a picture of a 240 chart, a 240-minute chart from 4/14. Okay? Can't really see the time on that chart. And when I do the next couple of charts, you'll be able to see the time that I was looking at this. It looked to me like the British pound had some resistance over here to the left. And so once I saw the resistance to the left, I expected some kind of horizontal movement. So I find a couple of similar lows and a couple of similar highs. I draw a couple of trend lines around there, and now I've marked off a perfect tradable channel. Okay? And so once I find the channel, I can take it down to the next level and try to find some strategies to actually enter the trades. So the British pound was the currency I selected. Now, I don't know how many people here use fancy charting platforms. TradeStation happens to be one of the more fancy charting platforms that I've used for many years. So it has some capabilities that are not available in most of the other charting packages. But TradeStation allows me to actually take a chart that's based on 240 minutes and then overlay a 2-minute chart right on top of the same chart. Okay? What's the advantages of having something like that? I don't have to keep looking back and forth at different charts to see what the overall picture is. And the greatest thing about it is, no matter what time of the day that I turn the platform on, I can see every 2 minutes of those 4-hour candles all in the same place. So I can see the prior 4-hour candle highs and lows very, very clearly. And I use that strategy because it really becomes an interesting way to trade the markets. Okay. Now, the strategies I've selected to show you guys today are just going to be simple trend line breaks, pullbacks to trend lines, for example. And then I also happen to stick a Fibonacci retracement tool on one of the charts. So you're going to have multiple opportunities, and it's pretty much you could trade any time of the day. You can trade just looking at your chart. You can stay away when it's really, really quiet. You could plan for breakouts of 4-hour ranges if you happen to like to trade those kind of strategies. Everybody agrees that the British pound is definitely in some kind of an uptrend. It really looks like it wants to go higher, wants to break out. So if you trade in the direction of the possible continuation of the uptrend, you can definitely also join a trend move in motion. Okay. My stop losses are going to be the previous candle's low for a long and the previous candle's highs for a short. Now, not exactly the 4-hour chart so much as, let's say I enter on a 2-minute chart and I want to use the previous 4 hours low for a stop loss. It would have to be very, very close to this hour's low or this 4-hour low. So we'll see that when we see the charts. I'll point that out to you so it'll be very, very easy to see. Okay. And then, of course, the targets, if I'm long, they're going to be the highs of the previous 4 hours. And if I'm short, they're going to be the lows of the previous 4-hour candles. So I've set myself up with a strategy, and I've given myself a perfect little strategy to trade. So let's see what those charts actually look like. All right, now you're looking at the British pound on a 240 chart, and you'll see a bunch of big candles here. And I labeled them. This happens to be the midnight candle from 414. This was the first candle of the day yesterday. And then, of course, the next candle that you're seeing here, where I'm at the high and the low, happens to be the 4 a.m. candle. And all these little tiny candles that you see inside here are the 2-minute candles that it takes these 4 hours to plot. Okay? So once you're looking at the market like this, it's a pretty interesting picture. Now, the beauty part of this is, when I took this picture, I first woke up in the morning yesterday. We had an all-day event to do, so I had things planned for the entire day. But I also wanted to plan for this webinar for today. So I wanted to try to take a few trades based on just trading inside of these 4-hour candles. So the midnight candle, here's the high and the low, and I marked them off with a couple of trend lines. And the 4 a.m. candle, here's the high and the low of that candle, and I marked those off with a couple of trend lines going forward. When I saw this picture right here, I actually drew a trend line, and believe it or not, my bad, I took a screenshot of the trend line before I entered the trade, but unfortunately what I did is cut and pasted the next slide over that one, so you can't see the slide where I took the entry, unfortunately. but that's okay. I'll show you what it looks like in a second. Before I do that, though, I wanted to show you guys we were very, very close to the end of the 4 o'clock candle when I actually got a chance to do this. And here's what TradeStation does. As soon as that candle closes, that 4-hour candle, the next 4-hour candle opens to the right here. And now you're all the way over here to the left. And this was just the first 12 minutes of this candle starting to form. So this is really a cool way to trade. I've got my midnight candle here, and I've got all the trading that took place inside there. And I've got my 4-hour candle, so that's all of this trading inside of here. And now I'm starting my brand new 8 o'clock in the morning candle. Okay? So now what am I going to do? I'm going to actually take a trade based on what I see on my chart. Okay? So this picture of this chart here, what I did is I drew a downtrend line based on this high and this high here. And then I drew an uptrend line, and I sort of made a symmetrical triangle pattern. Okay? And it's kind of funny looking, but it doesn't matter. It's whatever it takes for you guys to get comfortable taking trades. Everybody that knows me, when I do these short-term type of trades, trend lines are just about the greatest thing in the world. You can draw them. Pretty soon, other people can see the same trend line you're drawing. They'll enter at different points on these trend lines. But what happened is on the break of this trend line here, I entered long, and I placed my stop loss below these lows to give myself a chance for that trade to work out. Well, I also happen to be placing my stop loss very close to the low of that new 8-hour candle. Now, if I break that low, I'm probably going to come back down to the 4 a.m. candle lows. So I don't want to be in there taking the ride because that'll be a lot of pain. Okay? Now, again, these trades don't always work out. This one that you happen to see here, it broke the trend line. It ran up to the first target. Beautiful. It worked. Why did I select that as the first target? Because it happens to be the line from the midnight candle. So I used that as a natural resistance area to just take a profit on that trade. Once that candle stopped going up, I actually drew another downtrend line for a trade that could be possible in the future. All right? Now, yesterday we were in Orlando, Florida, and we were actually doing a live event all day long. And that event was supposed to start at around 8 o'clock in the morning. So I really didn't have time to do a lot of trades, but this little one here was a small winner. I'm going to actually show you on the next screenshot, the next time I was actually able to come back and look at this chart. Notice how from my long entry here with my original stop loss, notice how we actually eventually broke through target 1, went a little higher, came back down and almost found some support on the trend line. Now, if you didn't exit the entire position, I only entered with 1 contract, but if you would have entered with multiple contracts, you could have exited at the break of the trend line here, and you'll get another opportunity to take the trade. But this one eventually came up here, and notice how my 8 o'clock candle, which was that really little tiny candle at the beginning of this thing, it managed to extend the range all the way up to here and then come all the way back down here. So, again, this is such a interesting little way to trade that you can have so many different possibilities. And this is just using simple trend lines. You could do this with moving averages. There's all kinds of ways that you could trade this. Now, unfortunately, because of my preparations for what we had to do yesterday, I only got a chance to trade once in the morning. And then I also had a chance to trade using Fibonacci's too. Okay, so this is, again, the second trade that I took. Okay, and let me go back to the slide before. The first trade I took based on the trend line, I exited, and then I set up the Fibonacci chart that you see here next. Now, what I did for the Fibonacci's was, and you'll love this one, I connected the low to the high, but I connected the Fibonacci ladder upside down. Okay? So somebody typed in there, that's sick. Well, yeah. Sometimes when you're kind of trying to trade and trying to get dressed and trying to work out and trying to eat breakfast and trying to get ready for your event that you had to do that day, you're going to do things like making mistakes, okay? So, anyway, whatever. There were a couple of possibilities for entry here, okay? I took a trade based on an entry way up here, folks. And the way I use it with a Fibonacci's, of course, if these Fibonacci's were correct, and they were in the right direction like they were supposed to be. When you find support on one of these lower Fibonacci's, you could take a break of the next Fibonacci, and then your targets could be the next Fibonacci level just above there, especially if you're trading in the direction of the major trend. Actually, the best place to have taken an entry would have been down here. Unfortunately, by the time I got to the computer, this was actually the place where I was able to enter it. Now remember, I'm juggling a lot of balls when I'm doing this preparation, so the next slide would have been the optimal entry and would have been a better place, of course, to enter, which would have been down here. But if you can't get that trade, doesn't matter. You can enter from this Fibonacci, put your stop loss here, and enter here. If you're missing the trade because you're not in front of the computer, that's the nice thing about Fibonacci's. You could take a break of this Fibonacci and put your stop loss below this low. You could put your stop loss and then take your targets every time you hit one of these different Fibonacci levels. Now, sometimes because you're using this 4-hour candle and it was a pretty decent sized candle, there'll be some nice distance between these marks. Okay, you might get 10, 20 pips after the spread. So anyway, the British pound definitely was in an uptrend. It definitely was finding support every time it tested these Fibonacci's. If I was in front of the computer at the time, I could have taken here an entry on a break of this Fibonacci with this one as the next target and a logical stop loss. Now, I don't make any illusions about trading. You have to understand something. You can have losers doing this too. You could take an entry, you could place your stop loss, and you can get stopped out. Okay, there's no reason why you shouldn't have winners and losers. It's real world trading. We ran up into a little resistance here. If you make it to target 1 and you run into resistance or run resistance higher up, maybe you want to take a profit on the entire position. Altogether, I want to tell you, I'm going to show you a slide where I took about 14 of these little sample trades on here. So I had a bunch of little scalping opportunities. Anytime somebody here comes to show you a strategy, you get yourself a demo account and practice a Fibonacci break, practice trend line breaks before you commit real money. It's the beauty part of the Forex markets. There's no reason to commit real money until you're comfortable with a strategy. But make no mistakes. As you sit out there listening to me today, the quicker you come up with something that you can do on a repetitive basis, the more likely you will be a successful trader. And then trading will just be something you do to make money instead of something that you stress over. Okay, but until you learn how these skill sets work, I suggest you come up with a bunch of different ideas and try them out for yourself. Okay. I blew the slide up on the next slide here a little bit higher, and of course we did find some resistance here. Okay, so we're actually retracing a little bit of this nice little up move, but that's going to set up another opportunity. Maybe if I cross back through this Fibonacci on the way back up, I've got an opportunity to buy here, or maybe I wait for price to come a little bit lower. Okay, so a couple of slides later, again, I made the slides even a little bit bigger. Okay. Notice here that if you did enter on one of these candles, and I think I did. I think this was one of the losing trades I had. I entered on this candle here because it broke the Fibonacci. I placed my stop loss below here again, and then I had a couple of candles that actually came down and stopped me out. But then notice I got a couple of candles that bounce here like this, and another break through this Fibonacci. Here's another opportunity really, really close to this 8 o'clock low. It's 8 a.m. candle low to where you can re-enter again, and the whole process starts all over again. Right? Coco's asking if I use pivots. Coco, I didn't do the demonstration today with pivots, but Maud's going to have me back here at the about the end of the month, next month, for the 3 hours, and I'm going to try to actually trade this system live for a little bit to demonstrate. So when I come back on that demonstration, I'll actually put pivots on there, and we'll see if they work too. But Coco, you know, that's a great question. Eventually, you can come up with any kind of thing. And again, if you're using logical stop losses, if you're taking a break of R1 or R2 or the pivot line itself, and you're using a stop loss below the S1 line, you'll know what your risk is. Okay, Boyke, am I a scalper? Boyke, I can be a scalper if I want to be a scalper, but I'm by nature, I'm a swing trader. These markets are fantastic markets to actually swing trade too. But you got to take what the market gives you. Right now, if you're trading in a trading range, you want to be a scalper, absolutely. Why not? Okay? But remember what I say every time I come out to do these webinars, and I love coming back here. You need a strategy for a market that's in a trend move, and you need a strategy for a market that's not in a trend move. Or you need to focus on one strategy and not get involved with the other one. Because trend traders will lose money when the markets go flat, and trading range traders will lose money when the market starts to trend. So you have to identify trading ranges, and you saw how we did that at the beginning here. We looked at that 4-hour chart, so it was a perfect opportunity to decide that we were going nowhere for at least a little while. Okay, so those are great questions, guys. Jack, 100 to 200 pip range on that the 4-hour chart. It could be a very big range for the British pound, but I've traded this system with the euro on a 30-minute chart, and 60 pips most of the time is what I look for a minimum of a wide range. Okay. All right. Cool. Let's move on. Let's just show you a little bit here what happened as the day went on. Now, notice that we've got our 4 o'clock candle here. We can't see our midnight candle. It's kind of covered up here. But we've just closed our 8 o'clock candle. And now what's happening is I'm sitting, getting ready to start doing some presentations at the event that we were at yesterday. And I'm watching my noon candle start to kick off here. This is just a little tiny candle right now, the noon candle. And I'm saying to myself, you know, I don't have my Fibonacci's on here. I don't have any lines of any kind on here except for the midnight candles, highs and lows. I've got the 8 o'clock candle, highs and lows. Or I'm sorry, the 4 o'clock candle, highs and lows. And I also have the 8 o'clock candles, highs and lows. So I've got plenty of lines on here just based on the previous candles, highs and lows. So how about I enter right here with a stop loss right below the low here? If I break this low, I'm probably going to come down and test this prior low. If not, I've got another opportunity for a trade. Okay. So we took a little entry and we got up to our first target. And at this point in time now, it's 8:30 in the morning and our event is just about to kick off. And I'm sitting there looking at my computer. I'm talking to people at the event. So the noon candle is starting to expand. It's starting to go a little bit higher at this time. And at that point in time, folks, I turned it off for the day. I didn't take any other trades. Okay. So let's see what happens here. We just look at a couple other charts here. Now I put the lines on the noon candle. That's why I put this one here. I hit target 1 and price kind of sold off from there. All right. So I'm finished pretty much trading at this point. I'm just looking at the charts and taking screenshots to see what happened after that. All right. Notice now, this is important. Here's the 8 o'clock candle, high and low. Notice how during the course of this candle here, we actually broke the 8 o'clock candle low. And we extended the low of the noon candle. So if you look at the previous chart here you'll see the high and the low of the noon candle is here at this point in time. Then we started to sell off on the next candle, and we actually broke the prior candle's low. Okay, and then we crossed back up above the 8 o'clock low. Now, I don't have Fibonacci's on here. I don't have trend lines. I've got this line as a possible break for a trade. I'm thinking longs. I'm not looking for shorts because, obviously, I'm in some kind of an uptrend. So I can take this trade right here with a stop loss below these lows just based on breaking that one little line right there. And it's not always going to work out, but I'm going to stop myself out with a logical stop loss. And it's going to be a small loss if I take it. And I've got an opportunity to re-enter down here near this candle's low. So even without having trend lines or without Fibonacci's or without anything else, you definitely can use the break of the previous 8 a.m. candle low. Well, look at that entry. Okay, I didn't take it because now we're actually doing the events. I come on and I'm speaking to a crowd of people. I'm not paying attention to what's going on. But notice how we went from the low here and we extended the highs of the 8 o'clock candle. We actually came up I'm sorry, on the noon candle. We actually came up to around the 4 a.m. candle high. But as you guys can see, by just looking at this little chart with these lines on here, and they're really nothing. They're nothing more than having the 8-hour information on my chart or the 4-hour information on my chart to be able to actually plan trades based on just crossing simple things like these lines. Okay? All right, that's 414. Okay? All right, great. Thanks, Maud. Appreciate that. I've still got plenty of time. So let's wrap up 414's trading. Here's 414's trades, and as you can see, I took 14 little trades on the simulator, on this actual platform that you're looking at, TradeStation. I actually took 14 longs, I'm sorry, 12 longs and 2 little shorts, okay? The little shorts I actually took because we hit some resistance, and they were nothing trades. I mean, look, I made, nothing. But the longs here, you see, even though I had losses, my gains were bigger than my losses because my stop losses were just in tiny little logical places to place them, okay? And that's all trading is. I don't care what anybody else tells you. It's controlling your losers, letting your winners win for you, and just planning your trades pretty much, okay? So today is the webinar day, and I wake up this morning, and believe me, we flew back late last night, so I really didn't get up. I really didn't get up early this morning. And look at my 4-hour chart here on 415. Today, am I still trading inside the same channel that I was trading at yesterday? Okay. So here, this is a trend trader's nightmare, a market that goes nowhere. Okay. If you break these prior lows here, a trend trader is going to get short. And unless he's using a trailing stop or he knows where these other lows are, most of the time what happens is he gets short here and then all of a sudden the trade backs up on him. So trend traders, this is their nightmare when you're trading in a range. A trading range trader like me, I love it. Okay, gives me more opportunities than I could ever know. All right, so I get up this morning, I pour myself a cup of coffee. It's just a few minutes after 3. And I see what's going on here, and I say, darn it, I'm touching a trend line already. I draw a trend line. Bang, I hit the entry. And as soon as I hit the entry, we blast through target number 1. I don't even have a chance to take a screenshot. This thing just rocketed from here. Now look at this, though, folks. This is actually, let's go to the previous chart here. Look at how this low and these lows from 414 are just almost identical. So if I had been up a little bit earlier in the morning, I could have maybe had an even better trade. But it's real world trading. You can't be in front of the computer in a 24-hour market all day. You have to be sleeping. You have to take breaks. So you take what the market gives you. So you're drawing a trend line because you're entering in the middle of a channel. And notice you've got all these lines on your chart which are leftovers from yesterday. So in other words, guys, I didn't even prepare. I turned the chart on this morning, and I'm looking at the same chart from yesterday. But since I'm inside of a trading range from yesterday, that's fine. I'm just looking at different candles, highs and lows. But I don't need Fibonacci's now. If I break this line here, I can go long with a stop loss below a pivot low. If I draw my trend lines, I can enter using a trend line. I can use each one of these lines as targets after I enter. If it's a winner, it's a winner. If it's a loser, it's a loser. Okay? Nothing is going to work every time. I hit this little target here. I exited the trade at that time. I actually turned on the entries and the exits on TradeStation on this chart. All right? So price keeps moving a little higher. It goes a little bit higher from here. That's okay. We'll get another opportunity. Now notice something, though. We're kind of going sideways a little bit up here. Okay? So this time I go back to my Fibonacci chart. Now I've got the two charts separate from each other. I've got the trend line chart and I've got the Fibonacci chart. So here's the picture on the Fibonacci chart. I'm trading between the 38 and the 23 Fibonacci because I flipped them around. At least I did that, right? But I'm still using the day before's Fibonacci lines based on the day before's 8 a.m. candle. I haven't even changed that. Now, why am I saying all of this and saying, well, because I'm telling you that if you come up with a set of rules, you'll find, like me, you come up with a set of rules and you just use logical rules for entries, stop losses, and possible profit targets. you really won't, it'll be boring. It'll be something that you can do repetitively. Okay, so we take the entry. We've got a logical place to get out in case the trade backs up. Okay, and again, it happens to be one of those days where if you're trading the British pound, you're getting nice moves. Okay, look at this candle though. The candle from 4 o'clock in the morning has managed to go all the way from the previous day's lows all the way to we're almost challenging the previous day's highs. So again, if you have no plan for jumping on here, do not be the guy buying the top of this candle. Make a plan. Here, I plan for a break of Fibonacci's or a test of another Fibonacci level below here. I'm just planning simple trades. Okay. At this point, I've got things to do this morning. I said, okay, that's it. I took 2 trades. And I made a couple of bucks on them. And again, it's on the simulator here. Okay. So that I can't actually do them live when I'm doing this webinar like this, because right now we're probably looking at one of those little tiny candles because it's already 11 a.m. Central Time here. So I try to do this when the market's a little bit active. But look what happens after that, okay? This was originally the entry. I was testing the 38 Fibonacci at this point, and my targets were obviously the previous day's candle highs and lows. We just kept going higher and higher at this point. Now we're coming up to for the close of that 4 o'clock candle. So now you can see on here there's a couple of candles here. Obviously this one has to be the midnight candle. I didn't label them. This one has to be probably the 2000 candle, and this one's probably the 1600 candle at that time. Oops. And I just took a chart, real quick look to see where I was, to see if I was still inside the channel, and I'm getting very, very close to the top at this point. Okay. And notice here, folks, this is where the party ends. As soon as you get a candle that pokes outside of this channel, like this candle here did. Now, if that's the 4 o'clock candle, this is probably going to be the start of the 8 o'clock candle here. This is no longer a trading range for you to consider doing this. Sometimes what will happen is it'll go a little bit outside and come right back in and head back down to the bottom. But you can't take a chance as a trading range trader. You got to call it. You got to call it right there. You got to say, I was able to make highs above the previous day's highs. I'm probably going to go higher from here. So I took a picture of this candle a little bit later on now, and so I'm sure all of you heard this morning, if you were watching the TV or whatever, that we broke the 150 level in the British pound. Now you see that the channel is broken. We've managed to rally out of the candle. No matter what we do from here, a trading range trader just says, that's it. Party's over. Had a great trade. Had a great couple of days of trading. Made a little bit of money. Now I need to switch up to another trend type of strategy. And I promise you, as I do these webinars, we'll talk about trending strategies. We'll talk about trading range strategies. We'll basically take what the market gives us. Okay. This happens to be a small time frame chart, actually, the 2-minute chart, just so you can see that great big breakout candle here. And again, your entries could have been all over the place with different entries. This is not the Fibonacci chart now. This is the original trend line chart that I started the day with. And notice here, I marked each one of these candles. Here's yesterday's noon candle. Here's the 1600 candle. Here's the 20 candle. So you see how small these ranges are because it's very, very quiet at these periods of time. Here we have the midnight candle. Okay. And then we got some action at the 4 o'clock candle. And now we're starting to trend. Okay. And once we start to trend, here, this 4-hour candle is the 4 o'clock candle is the lows down here. Here's a higher low. Here's one of the first times you really see a higher low on the 8 o'clock candle. And there she goes. Okay. All right. So definitely interesting morning yesterday too. All right. So we've got a little bit of time for questions here. And I see one here. Jose is asking, how can I get a review of your techniques? Are they recorded on any websites? Jose, again, I'm an instructor with the Online Trading Academy. I'm also a part of the Online Trading Academy's virtual classroom. Most of the material is recorded for the students of the Online Trading Academy. However, I have done one other webinar that Maud recorded. Okay. And what will happen is as time goes on, I'll have other webinars out here. All right. and I'd be happy to share whatever little techniques I have. Okay. So great questions, guys. Awesome. What do you mean you drew your fibs upside down, Harley? Instead of connecting the high to the low, I connected the low to the high. Or no, I should have connected the low to the high, but I accidentally connected the high to the low, and that's why it was upside down. But I fixed it later on. I turned it upside down once I realized what I did. Boyke, do you trail your stop? Absolutely. Use a trend line break, anything you want. Swan, 4 o'clock is a London Open, so it was a Big Ben strategy. There you go. That's a strategy, too, that if you've seen strategies on breakouts of previous hours, highs or lows, that's a good time to use it, and that's a great chart to do it on, too. D, the reason that price pulls back after a breakout is because people like to take profits, so there's just normal profit taking. And when that happens, a lot of people that are long take their profits and they get scared out. Okay, but usually what happens is you have to figure a way to catch back on that trend, especially if it's going to go for a while. Okay. Yeah, that's true. The ratios are all the same no matter which way you draw them. It's just an embarrassment, right? Here I am teaching people how to draw Fibonacci's, and the teacher puts them on upside down. So I just laugh at myself because it was, they were upside down. But I caught it, and I straightened it out a couple of slides later. But, when you're trading, look, that's a great thing that you pointed this out, guys. Make sure you guys, when you trade, number one, you practice whatever strategy you're going to do. Number two, you focus on what you're doing, okay, so you don't make mistakes. And number three, you definitely come up with a simple set of rules that you execute over and over again, okay? Coco, I haven't tried fibs and pivots yet, but I could definitely suggest you probably want to use them separately because there will probably be too many lines on your charts. All right. Any other questions, folks? Happy to stick around, answer any of the other ones. I don't even know where the British pound ended up. I didn't get a chance to look. We had a couple of classes. Marcy, it was fabulous meeting you yesterday too. That was an awesome event. Yeah. All right. 4 o'clock is 9 o'clock London, but sometimes is earlier. This strategy just happens between the hours. I would say that you probably want to trade it on the times when it's a little bit more active. You saw how some of those other candles kind of got really, really small. So I definitely, if I were you, Swanee, I'd want to trade that when it gets a little bit busy. Okay. Al, what I'm using is TradeStation. The charting platform is TradeStation. You can execute trades through there if you want, live or on simulator. Okay, it's very, very flexible platform. Marcy, I didn't look at the euro today. The euro kind of came into some resistance recently, so it's been selling off for a while. We're actually going to talk about it a little bit later on in the classroom. Kind of divergence between the British pound and the euro right now. The euro seems to be weakening a little, and the British pound is pretty strong. Okay, so that'll be a topic of discussion in our virtual classroom, which is going to be later this afternoon. Okay. Yeah, Al, it's a broker, definitely. TradeStation uses Gain Capital, by the way. They clear their Forex trades through Gain Capital, so you can actually execute the trades using the charting platform, TradeStation, with Gain. Okay. Yeah, Coco, you can trail your stops if you want, anytime you want to use with that strategy, or just draw a trend line. All right. GBP versus the euro, yeah, definitely. That currency's definitely been the euro's been selling off against the pound too. So sometimes the spreads are a little bit expensive. Yeah, Haley, they can be, or Harley, they can be pricey. I use pretty much TradeStation for the charts mainly. I like to use a different platform for my execution. Sometimes you get too much data going into your platform. It'll freeze up your execution software. So sometimes it's good to have them separate. Okay. Cool. Okay, Marcy, you're only in the MIT. Well, welcome for coming in here. I'm glad you got a chance to pop in. These markets, it'll work on just about any other market, stock market too. Okay. But it's you got different hours when you trade the stock market. Okay, so we have all kinds of strategies. It doesn't really matter. The key is every time I show you one of these, it's going to be entry, exit, stop loss. That's all you can do. You can't make the market go in your favor, but you can say, okay, I'm going to place a trade with an entry, exit, and a stop loss. And that's planning your trades. And if you do that on a consistent basis, you'll find a way to become successful. Coco, I absolutely don't ignore fundamentals. I always look at fundamentals. I'm aware of what time the data releases are going to be released so that I don't get caught in some kind of a trade. So that's a good idea too. We didn't really talk about that, but use FX Street's calendar to tell you what time economic data is supposed to be released. If you are in a trade, make sure you tighten your stop loss because the brokers love running stop losses when there's economic data releases. So the reason that the currencies move like they do is all based on fundamentals. All right. I could have definitely have done this webinar using indicators, Harley. I just chose this time to actually just do it on price, but you definitely could use indicators. And I'll talk again about using indicators for entries using this strategy. Okay. Will it work for other markets? Yes, yes, yes. You can use it in the stock market. You can use it in pretty much any other market. But the thing about it that really makes it great for the Forex is those periods of time where the market goes as flat as it does. The stock market has flat periods of time too, but there's usually a lot of activity right around the open, and a lot of traders like to be there for the action. Okay. Ed is asking if I could show you the second slide again. I think this webinar is going to be recorded, so Ed, you'll get a chance to see the slides again for sure. Okay. All right. If you use fibs in 4 hours, do you draw it the day before highs and lows? You know what? You can use the previous day's highs and lows. Okay. You can also use a new high and low if your next candle has a higher high or a higher low. You can actually use the lowest low on the chart and the highest high on the chart. Whichever way you really want to move them around. Point being, though, is as I've said before, when I do Fibonacci's, if it's going to be a strong currency, it should stay between that 23 and the 38. Usually when it stays between the 23 and the 38, it wants to go higher. If it comes down to the 50 and then crosses the 38, that's an opportunity to get back in. But again, you have to have logical stop losses no matter what you guys do. Okay. Stoyan, yeah, KISS is very simple. No, let's make no mistakes about it. What's really happening in the Forex markets? Companies are buying other companies. Economies are moving in and out. Central banks are moving in and out of the market. There's all kinds of things happening all day long. There just happens to be those quiet periods where prices don't go anywhere. And for somebody that has a plan, similar to what we talked about today, it's a great opportunity for you to trade on your time schedule, fit this market into when it works for you. Okay. The breakout strategies that we talked about, okay, they usually work better when there's a lot of action. So this one will work when there's a little quiet time too. Okay. So Maud, I want to thank you all again. And thank you everybody for coming and inviting me here. And I really look forward to coming again next time. I'll be here sometime next week. We're still working that out. Have to go to Dubai for a little class, so we'll try to fit it in. I'll talk to you, Maud, about that, okay? Okay, folks, thank you very much. Everybody have yourselves a great day, and we'll see you next time, okay? Bye-bye.